G'day YouTubers, Pirate Pete here, coming to you from a very fine sunny afternoon here in Sydney to talk about our favourite topic, gold and silver. Alrighty, so in today's video I want to talk about, well, just explain what this gold and silver ratio actually is about. So if you're pretty new to gold and silver collecting, or you haven't quite got your head around how to interpret the ratio, just wanted to spend a bit of time explaining it. I'm going to sort of demonstrate it in practice, so stick around for that as well. But essentially, what this ratio is, it's actually quite simple. You take the current ounce price or spot price for gold, and you divide it by the current spot price for silver. And the answer you get shows you how much one is priced relative to the other. So if you take today's spot price for gold and you divide it by the spot price for silver, you find it's a little bit under 80 times. So it's about 76 times in today's prices. So that ratio is a very simple mathematical calculation. And when you plot it on a graph, it gives you a clear picture such as this to show you over time how that ratio has shifted around a lot. So it does jump around a fair bit. Right now, at 80 times, it's kind of looking at the higher side, where gold is looking a lot stronger relative to silver. And over history, that's it's showing a bit of a pattern there that is saying gold's a little bit, expensive over the price of silver. So if you're looking to buy metals, it just looks like silver's the better buy today, based on what this chart's showing. Back in 2010, silver was a lot stronger. It was a little over 30 times. That was probably a good time to buy gold. Obviously Captain Hindsight would show that, but anything under 50, I think, starts to say that silver is starting to get stronger relative to gold, and anything above 50 is suggesting that gold is a lot stronger than silver in historical terms. So where we are today, we're sitting up at around 80 times. So right now gold is a lot stronger than silver, and therefore if you're looking to buy low so that you can sell high later, silver's the way to go. Okay, so for the benefit of other newbies, here it is in practice. 80 times the ratio, it means I could buy 1 ounce of gold, or I could get 80 ounces of silver, and this is what it would look like. So would I want to buy it today, or do I want to buy it when it's 40 to 1? I mean, this is what 40 to 1 looks like. This is how much silver I would get versus 1 ounce of gold. This is how much I would not have in my stack. So do I want to wait until it's 40 to 1, or do I want to do it today, buy silver when it's 80 to 1? I get 80 ounces of silver at the same dollar value as 1 ounce of gold today. The other thing is, by buying up a holding of silver today, it just gives me something to trade with in future when the ratio between gold and silver does move back towards silver's favour. It means that I've got some metal there to trade back. So in the future, what I would be looking at is, let's say there's a 25% move. We saw in the charts before how often that happens, at least 2 or 3 times a decade. So if there's at least a 25% move back towards silver, out of my 8 blocks or 8 bars of silver, I'd only have to hand over 6 of those bars, roughly 6 of those bars, to get that 1 ounce of gold. And that leaves me with 2 ounces still in my stack. I've profited those 2 ounces. They're mine. I don't have to hand them over to acquire that ounce of gold after a 25% swing in that ratio. And I'm expecting that to happen 2 to 3 times a decade, that sort of a trading opportunity to occur. Now the next question is, given that I've got a bias towards silver, what type of silver is it that I'm looking to buy? Well, the main consideration I've got is I want to hold ounces. So while I'm building up a stack, my first preference is to get the lowest premium bullion I can get my hands on. And the bullion tends to come in a couple of different forms. You've got the bars, obviously, but you've also got certain coins which are bullion. Some of these coins are collectible. They're with a numismatic value, so there is a higher premium associated with them. So, for example, these 1990 kookaburras are quite collectible. They do attract quite a good premium, and if I find them at a pretty good sort of a price, I will pick them up. They are they're a pretty good looking coin, but they are collectible, and they can be profitable on a flip. So on eBay or some other trade with a collector, there are an opportunity to make a bit of a profit and take that profit into acquiring more bars. The other option is, you take this big chunk of metal here, the big kilo bullion coin, 2014. It was an opportunistic buy, so I found it at a pretty good price as part of a broader deal that I had with a dealer, and it was kind of those case where the deal was too good to ignore. It was pretty close to spot price. It wasn't quite at spot, but it was close enough, and a coin like that could be appealing to some collector in future, and it being a relatively young coin, I think over time it could do quite well in its numismatic value anyway, giving me a chance to profit on a high premium down the line. But this is the sort of stuff that I'm looking for, primarily bullion bars, but collectible bullion coins are also on my radar, especially if they've got a kookaburra on it. I don't know why, but I think it's just, coming from Australia, I think these coins just really appeal to me more, but I do tend to find that I'm able to get a pretty good price on the kookaburras here in Sydney versus what some others pay overseas. So I think it's a pretty good buy for me. Alrighty, so if you found this video at all useful or helpful, hit subscribe and stay plugged into the next video being released, and comment up if you have any questions or comments. Alright. Take care, and I'll catch you on the next video. Cheers.